They got it to work. I'm not sure what happened, but well, I did. I'm not sure what happened.
If everyone could please put their phones on mute. Thank you. Um, so our
So,
mission is strong families are the building blocks of strong communities, and Gateway exists to partner with families, support their development, and restore their pathway to wholeness. And so we actually have a 94% success rate keeping families together and preventing children from abuse and neglect through our family counseling and intensive in-home services. We also do therapeutic foster care, which is a specialized level of foster care for kids with emotional and behavioral needs, as well as crisis intervention. And the reason why we're here today is we are great at financial planning and counseling. So I'm going to let Doug take it from here. He is our financial expert, and he's going to talk to you about how you can become debt-free.
Awesome. Thank you, Collier. Welcome, everybody. Hope you're enjoying your Friday afternoon. And as Collier has said, we're going to talk about getting out of debt today. And so that, as you see on the screen, that is one of the reasons that Gateway has a financial freedom program, is that it's part of dealing with and working with the entire family. So yes, does a financial situation impact the entire ability to be healthy and whole? Absolutely. And as we move on, we're going to talk a little bit about what Gateway does to help in that process, and then we're going to give some real tips and pointers for what you can do to work your way out of debt. So here's just something that happened in 1 year within the Gateway Financial Freedom Program. 98 families avoided foreclosure, 184 became mortgage ready, 234 families avoided bankruptcy, and families as a whole paid back almost $1 million of debt. And one more fun thing, in 20 years, we have helped families pay back $69 million of debt through our debt management program. So that's a big deal, and that's part of why we feel like we can talk about this today. So from a getting out of debt standpoint, I want to introduce real quickly a few things about credit, and then we'll get into the real details of some things you can do to get out of debt. So what is credit? Credit is using someone else's money to get what you want right now, but then you're going to have to pay them back later, usually with more, maybe a lot more money. Okay? And what does that cost you? You have interest and fees? Yes? So look at the example on your screen. If you have a $2,000 credit card balance at 20% interest, and you never use the card again, but all you do is make the minimum payments, you'll be paying that card for longer than your mortgage. 33 years and $9,125 later, you're paying it off. Pretty amazing stuff. That's why we want to get out of it and not get back in. Let's keep rolling. So why is good credit even important? Let's talk about that for a little bit. There are 5 basic reasons, and if you downloaded the materials that we sent, this is kind of where we start with the outline, reasons that good credit's important. There's 5 major things. One is so that you can handle an emergency before you have a savings account built up to handle it. Okay? The second important reason is making major purchases, house, car, etc. And when you do those things, if you've got good credit, it saves you money because you pay less interest. And on a small purchase, that doesn't make a lot of difference. But on a big purchase like a house, even a half a point or a point in interest makes a really big difference on the amount that you pay back. And these days, credit's even important when it comes to a job search. And that's not true of every job, but more and more jobs are looking at credit reports as part of that process. So you want to maintain a positive history. And last but not least, you will probably not get turned down for insurance when you for property or car insurance based on your credit, but they will charge you a higher fee if your credit is poor. And so you want to maintain, that's just one more reason to maintain good a good credit history. A couple other quick things by way of just introduction about credit. There's three. Some people might say four if you add one more here, but there's three primary C's that the banks look at when you look to borrow. One is collateral, or some people call that capital and call that a fourth C. Okay, and that's what they can take from you if you don't make your payment. Character, that's how you've paid your bills in the past. That's primarily your credit report. Okay, and the third one is your capacity, and that is your ability to repay that debt. So it's how much do you make, your income, and then how much do you owe. So one of the things we talk about with that one is if two of us walked into the bank and we have identical incomes and our pay history has been great for past debts, but I have 3 credit cards and a high student loan and a car note, and I'm trying to borrow for something else, and you don't have anything else, or maybe one small credit card, you have much better capacity to obtain that next loan. But today we're going to be talking more about not getting the loan, but about getting rid of them and getting out. So here's some rules for credit card usage. First of all, use it only for things in your budget. We don't want to be going out and doing a bunch of extra stuff because we have access to credit. Use it only for items that you were going to purchase anyway. And then, pay your bill in full every month. Now this assumes that you are at that point where your credit card, you're starting off with no balance or whatever. So this is kind of after we've gotten out of debt and going forward, just pay it in full every month. So if you charge $200, pay $200. And if you don't follow those 2 rules, just cut off your credit card. That's to be safe, so that you don't get back in debt problems again, which is a lot of what we see in the office. Okay? And then here's just a little information about if you want to get your own credit report and take a look at it. This is one place you can go. You can go to this annualcreditreport.com, and you can get 1 free copy per year of your credit report. All right, now what we've actually been waiting for. Let's talk about how to get out of debt. So we want to make your wallet happy. Everybody smiling? And let's talk about the steps to do that. First of all, we talked in a previous slide briefly about that budget, only using your credit card for budgeted items. So we want to make sure when you're working towards getting out of debt that you budget for that. And so you're going to set a payment plan in place to get completely out of the debt. And that's the starting point. Okay, so here we go. That's step 1. Step 2, make your minimum payments on all of your accounts except for your smallest debt. And on that smallest debt, here's the big deal. On the smallest debt, power pay it. Some people call this the debt snowball method. But that means make your minimum payment and then see if you can find in your budget a little extra money, as much as possible, and pay that extra towards the smallest debt as well. And we're going to use an example later where we talk about adding $100. Then when that debt is paid off, that smallest one, whatever it might be, take the amount that you were spending on that debt and add it to your next smallest debt and continue the payment plan from there. Sometimes here I would say, does that make sense? And I get sort of those dazed, confused looks. I wish I could see what y'all are looking like right now. So wait, what? Are you confused? Let's use an example to talk through it, okay? So we're going to use Sally. And Sally comes to Gateway Financial Freedom with some debt. Maybe not huge amounts, but she's struggling with it a little bit. She's got 3 credit card payments, and you see it on the screen. One with a $500 balance and a $30 a month payment, a $1,000 balance and a $50 a month, and so on. She's got a student loan for $7,500 and making a payment of $170 on it, and she's got a car loan still owing $12,500 and a payment of $350 per month on it. So that means she has a total debt amount of $24,000 and minimum required payments right now of $700 per month. So from a budget perspective, we're going to budget at minimum, that's what we're already paying, a minimum of $700 per month. However, here's what we really want to do. We're going to do the power pay thing that one of the previous slides talked about. So in step one, you've gone through your budget and you've said, okay, I can cut back a little here, I can cut back a little there, I can make a little bit more here, and I've got an extra $100 that I can put towards getting out of debt. So instead of $30 a month, we're going to say pay $130 a month towards the $500 balance on this smallest debt. That's only going to take you 4 months. And if you can find any extra, even beyond the 100 extra, that's even less time, but about 4 months' time to pay this off. Once you pay it off, we go to step two. Step two, we take the $130 that we were paying to the smallest debt, we add it to the $50 we were paying to this debt, and now you're paying $180 a month on this balance. Once that's paid off, let's keep going. Step three, we're making progress. We got 2 of our debts done already, and we're probably 9 months or so into this thing. That's fantastic. Now we can take the $180 that we were paying previously, add it to the $100 a month that was going to debt number 3, excuse me, and we are sending them $280 a month towards this balance that started at $2,500 and has been coming down a little bit already because we've been paying $100 a month. So now we're $280 a month towards this debt. A few more months and it's paid off, and we can go to step 4. Now we've got the student loan. We were paying $170 a month on the student loan, but guess what? Now we can start paying $450 per month towards the student loan. $280 from what we were paying in step 3, plus the $170 that we were already paying. Not going to take a whole lot longer. This debt's paid off too, and now we can finish step 5. Now we go to the car note. Our last one, our biggest one, except possibly a mortgage. We don't include the mortgage in this process. We can talk about that a little later perhaps if you have questions about it. But for these purposes, we're talking about pretty much any debt except a mortgage. In step 5, I'm now paying $800 a month. The $350 I've been paying towards my car, plus the $450 from the previous debt or debts, and I'm doing $800 a month to get my car paid off. This is what we call the power pay or the debt snowball principle. Once this one's paid off, you're done. And if you followed this through, you would pay it off probably about a year and a half quicker, a year to a year and a half quicker than what you would have paid it in the past if you just made your regular payments. And look, $800 a month sounds crazy, but you were paying $700 a month before in total. All we've done is add $100 a month to the total payments. But the key is when you pay off one, you have to take that amount and add it to the next one. That's the debt snowball, and if you want to get out of debt the most quickly, that's the way to go about doing it. But sometimes we have to have some additional things that happen. So here's a few additional tips. When you're planning, when you're setting up that budget plan, make sure that you pay your loans before you pay your wants. Recognize, sometimes I have people come in the office often and they'll talk about, I have loans and then I have credit cards. Well, credit cards are loans too. So we want to get them paid off through that snowball process as quickly as possible. And if you want to get out of debt, you cannot continue to use the credit cards because you're just charging it back up. So we've got to stop the charging. And that takes some discipline, y'all. It's hard work. We might make it sound fairly simple on the phone, but it's hard work. So here's what a few other things you can do. And there's some bullet points here, but I'm going to talk through a couple of these so you kind of understand them better. First of all, it's very important to have a good relationship with your local bank or credit union. You want to maintain that and know what's going on with it. That way, if you ever had to borrow again somewhere, you could certainly do that in that process and with that local bank or credit union. Another option, so now I'm going to look at a few options of ways that you can use the debt snowball idea, but maybe even do it faster. If you have good credit, you've had excellent pay history from the past, maybe you have good equity in a home, but if your credit history has been very positive, you can oftentimes consolidate your loans. So if you use Sally's example from the previous slides, if you had those 5 debts, you might be able to get one loan for $24,000. You would probably be able to get it at a lower interest rate and have one payment, but you saw from the budget, you can still budget for your $800 a month and just work at making that one payment. It's just a simpler process. Oftentimes, if we're talking about that kind of money, you may have to leverage the equity in a house or a vehicle or something like that. You probably won't get a personal loan for $24,000 without some sort of collateral. Another option that can sometimes work and is transferring balances to low or no interest credit cards. That's another way to work your way out of the debt. And that's something I know about that personally. Some years ago, when we had a car note, we actually transferred the car loan to a no interest credit card. And so, but kept making our same payment. So now we're paying off that debt at no interest. Again, probably going to have to have pretty decent credit to do that. And the other thing you have to watch out for if you do that is, excuse me, is that look for the fee. There may be an upfront fee for doing that, and you just have to weigh whether it's worth the cost of the transfer or not. So that's another method. In both of those first two, the caution that I would have for everybody is cut up your cards or make sure that you're doing it as a method for getting out of debt. Because if you don't, there's the temptation to charge those credit cards right back up, and now you have this consolidation loan or debt that you've transferred to another card and the credit card debt that you've charged again. So that's where you have to be really careful. Renegotiating debt. Some people call that debt settlement. And the idea there, that's especially if you're already 3-4 months behind or things are already at collections accounts, you can sometimes negotiate with that creditor to pay back less than what they're saying that you owe. So if you owed $1,000 to somebody and it was in collections, you may be able to negotiate with your credit with that collection agency to come up with a repayment of say $500 or $600 instead of $1,000. In most cases, every once in a while there's an exception, but in most cases when you do that, you will need to have the money in hand right away. In other words, if you negotiated a $500 settlement on a $1,000 debt, you're going to need to pay that $500 right then once you negotiate it. The big caution I have on doing this, number one, don't do it if you're current on everything and your credit's good, because it will really hurt your credit. Do it only if you're at collections already or significantly behind. But the other caution is, even if you've negotiated a good deal verbally, do not send them a dime until you have it in writing, that this will pay the debt in full. And then make sure you keep up with that paperwork and with the payment that you make so that you have proof that it's been paid. Okay? So those are a few other ideas based on certain situations. But with all of that, that's part of what we can teach you, point you to if you wanted to talk with someone at Gateway. So if you need assistance, we'd love for you to come to Gateway and talk with us. And so I wanted to talk with you briefly about a couple of things that Gateway does specifically when it comes to debt management, when it comes to getting out of debt. First of all, we do something that we call a debt management plan. In the credit counseling world that we live in, so to speak, that we work in, a debt management plan is kind of like a consolidation. You make one monthly payment but literally it's to our organization, and then we disperse your payment to your credit card companies. We do not do the debt management plans for things like car notes, house payments, those sorts of things, and sometimes some other loans as well, primarily focused on credit card debt and occasionally some other small loans or kinds of accounts. But it's one payment a month, and the benefit of it is, number one, it's easier to handle, and number two, we can negotiate lower interest rates and oftentimes then a little lower payment that's more affordable for you. But we do use the debt snowball principle then. So you're making that one monthly payment. Even when one creditor pays off, you keep making that same payment, and that amount that paid off one debt is now applied to the others. We also have a very specialty program right now where we partner with a small local credit union, Alabama Central Credit Union, and the Community Foundation of Greater Birmingham. We call it Lighten Up, and it is actually for people that have a payday loan or a title loan, and after we've done some counseling, some financial education with those persons, we can help obtain a loan. The credit union gives the loan up to $750 to pay off a payday loan or a title loan and get you out of that debt, because that is a horrible cycle of debt. So those are just a couple of other additional debt management kinds of things that you can do. Finally, on our list here, we just have a few other things that we can do. We're a HUD-approved housing counseling agency, so we mortgage counseling, both pre-purchase, foreclosure prevention, and also reverse mortgage counseling for those that are 62 years of age and older. We just do a lot of general financial planning or coaching, you might want to say, focusing on budget issues and things like that. We listed relationship advice. I mean, we sort of chuckle when we say that, but guess what? Money issues are a big deal in families and in marriages. Some of my favorite clients over the years have been engaged couples that came to us and just wanted to talk about, wow, we've been on our own, and we've got two incomes coming together and two households coming together to become one. How do we go about doing that from a financial perspective? Do you have advice? Also, we know statistically that money problems, are one of the highest, if not the highest, reason for divorce. So again, if it's a marriage situation and we can help work out some money issues, we're addressing relationship issues as well, and many more things that we can provide. So you have the phone number on the screen for people that are interested in an individual appointment, or you can email us at help@gway.org. Okay? And just a couple other things to watch out for as you're working at this. Here's some scams, and we call them, they're legal, unfortunately, but they are scams. So title loans, pawn shops, credit repair clinics that you might hear advertised or see little signs by the side of the road, even rent to own, all of these things, and of course payday lending, all of these things, while legal, are going to cost you an arm and a leg to do. So they're not a good tool for getting out of debt, trying to borrow from one of these to pay off something else. And they're going to keep you in a cycle of debt, everything except for the credit repair clinics. Credit repair clinics are charging you money to try to fix your credit report. That's something you can do on your own, or let us teach you how to do it. And you can do it for free, except for maybe the cost of a stamp or two. And so don't let somebody else charge you money for something that doesn't take much time for you to do on your own. And yes, really, please do not go to the payday loan stores to try to especially if you're trying to work your way out of debt, but even if you're not quite at that point and you think, I need a little extra cash right now, I know it's easy, I know they're open all hours, but that's not the way to go, because they're going to charge you $300, $400, well, maybe not 5, 456 is the max that we've seen % interest rate. So, we've talked through this. Are you ready to be debt-free? That's kind of a quick overview of a variety of ways that you can work at it. But if you're ready to be debt-free, it's all about putting pen to paper, coming up with a plan, and we would love to help you do that at Gateway. So you can make an appointment there, and again, the same phone number and the same website and email address that you can refer to. And that kind of gives you, in the first 30 minutes here, that gives you the overview of not only what we do, but of some tips and some ways that you can work your way out of debt. You can unmute now if you want, or you can send some messages on the chat. And are there questions that you would like to ask at this point? We'd love to address. I'm still here, and obviously, and Collier here from Gateway, and Charlie Pearson, one of our other financial counselors, is available to answer some questions right now if you have them.
Doug, what does the first appointment look like with you?
Great question. So the first appointment, when someone comes to see us, it's really a gathering of information on the front end. Probably the first half or so of the appointment is information gathering. So that means we're going to look at income, how much money's coming into the household. We're going to go through a detailed budget with you. You can find that budget on our website, or excuse me, or it's something you could fill out when you first come into the office at the time of the appointment. It will be given to you. But we're going to go through a detailed budget sheet, and we're going to, in almost all cases, pull a credit report at that first appointment. And so we're reviewing all parts of people's financial lives on that front end. And then we also have a little questionnaire that people fill out when they first come in that ask questions about goals in particular. So then we take a look at those goals and we talk about what is it that you want to try to accomplish. Are you interested in buying a house for the first time, but you know that your credit is preventing it right now? Okay, we'll talk about steps that you can take to begin with to work towards preparing to buy a house for the first time. So it really depends on the need. But almost every appointment, the first appointment, is income, helping to look at and start preparing a detailed budget and credit report so we can see everything that's there. Good question. Anybody else got questions that you'd like to have answered? Still 9 on the line.
Do you help with a financial plan?
So describe a financial plan. When we talk, we are not expert. When I hear financial planning, lots of times what people are referring to is a retirement plan and where to invest and how to do that and so on. We are not experts in that area. However, if you're referring to, from a financial plan, if you're referring to a budget, and I actually prefer the term financial plan or spending plan versus budget, then yes, we absolutely do that. And it can be as detailed and elaborate or as general as needed. I actually had a client yesterday where it wasn't just that we were putting together, here's monthly expenses. We actually broke it down per paycheck. Here's what to pay here, here's what to pay here, here's what to pay here on your paycheck, for each paycheck that she was receiving. So yes, from that perspective, that is a financial plan, and we certainly can help with that. Other questions? Want to add anything? Yeah, I'm reading them. So we will talk, it's a great question about investing, retirement planning, etc. What I tell people about that is we can talk in general about those issues. We can help figure out how much you feel like you would have from a budget perspective to address and be able to put towards investing, retirement planning, etc. But to get into the details of retirement planning, you really are going to need someone beyond us, after us. We're kind of the first step, boots on the ground, day-to-day living, and then you would need a certified financial planner in most cases after that. So again, when we talk about investing in financial planning, retirement planning, we're going to talk in generalities. Best to use mutual funds in general, okay? Roth IRAs are good things to do after you've maxed out a 401k or a 403b through your work. We will talk about 401ks just from the perspective of if you are receiving matching dollars, like 50 cents on the dollar or dollar for dollar match at your employer, that's the best retirement planning you can do, because there's not anywhere else that you're going to make a return of 25 or 50 or 100% on your money, okay? So we can talk in generalities about investing in retirement planning, but again, we are not experts on the details. We're not certified financial planners. Great question. Thank you.
Do you work with kids at all?
Do we work with children at all? One-on-one, we have not done that. Not saying we couldn't, but we haven't. However, we have been in some social service settings and some schools where a teacher or another organization will ask us to come and speak to a small group of children. And with children, even there, we're typically talking about middle school at the youngest and up into high school. One of the things that I enjoy doing, however, as a parent, is talking with other parents about ways, even at very young ages, that you can teach your children about handling money. So it's not so much me teaching the children or us teaching the children as it is teaching the parents how they can do that in their home. Good stuff. So you're ready to get debt-free? Or maybe you are debt-free and you're ready for the next step. That's exciting if you are. Other questions that you might have? I wish I had the audio. I have been reading the chat questions, if you can tell, and I appreciate those. Anybody else with a question? Well, I have 2:45 approximately on my watch. If nobody else has one, and I'm just, do you offer classes throughout the year or seminars? The answer to that is yes. And we would love to have you call us. Again, you can call that main number on the line, and they will get you through to somebody to help get a class scheduled somewhere. So we very much enjoy doing that. In reality, while a lot of our work is, I'll call it crisis intervention, we typically, when people walk in our door for one-on-one counseling, they feel like at least that they're in some financial difficulty already. The classes are all about prevention. We'd rather talk to people, and really one-on-one we'd rather too, but it's great either way. We'd love to talk with people before people are at the point of struggle or they're on the brink of bankruptcy and want to find a way to avoid it. So, so yes, throughout the year, and it would just call us and ask, are they also free? That's a good question. Here's my response to that, and if my bosses want to tell me different sometime, then they can. We're not going to turn down the opportunity to come and share the good news of financial freedom, but we really would prefer if people do pay for the service. And so in terms of a cost, when we go to a for-profit organization or even a church sometimes, what we'll tell them is it would be nice to get paid $80 per group hour. So if we're coming for a 1 hour presentation, to pay at least 80, of course it costs us more per hour to do a 1 hour one than it does to do an hour and a half or 2 hours, because we have the same amount of travel and usually similar amount of prep time involved. But that kind of gives you a ballpark figure. But if someone paid us 50, we'll come and do it. We don't want to turn people down based just on the dollar figure. And I also noticed your question there about for free, and the appointments. Most of them initially are free, but depending on what we need to do after that, there may often be a one-time $50 fee that we charge. So in some of our appointments, in the not too distant future, we will need to charge that on the front end, and then if you have follow-up appointments, then it's, there's no additional cost. So, and the other thing I would say about that from a fee standpoint, and I appreciate you asking the question about it, is that we'll never turn someone down based on ability or inability to pay for services. But it is something that, we live off of grants and other sorts of things, but it's also something that's helpful to charge a small fee somewhere. So, and you're welcome. I see your chat there, and that's good. Considering getting a credit card and trying to get informed, this is a good way to get informed. And I am not opposed, like some people are, to having one credit card, especially as a way for building credit. But you really need to go into it knowing what you're getting into, making a plan for exactly how you're going to use it, and pay the bill in full when it comes. So one of the things, as an example of that our family has chosen to do, is we have a couple of our regular monthly bills, our cell phone bill and our cable TV bill, cable and internet. We have them those bills charged to our credit card. It's the same exact amount every month. We know exactly what to expect. And then when the credit card bill comes, we just go ahead and pay it that way instead of paying those other bills separately. Thank you for that response about the payday loans. That's great. Yeah, we do call them scams. They're legal scams at this point, but they are scams. So, and even the rent to own, the other thing that we sometimes highlight when we talk about those issues as being a negative thing with your money, is that they don't help you build credit because they're not reporting to the credit bureaus. So even if, on a payday loan, even if it was used in the best possible way, I can't really think of a good way, but the best possible way is you get the payday loan, and when payday comes, you pay it back, and you're done, and you walk away from it. Even if that does happen, which is pretty rare from what I'm told, it still is not building credit history. So again, avoiding those sorts of things is the best way to go. And I appreciate that response about the scams. That's good. Anybody else? I hope this was helpful. It's a little new and different. I'll just admit to that for me, because I'm used to talking in front of a group of people. And if y'all could have seen me today, knowing that I was doing this without being in front of a group of people, you probably would have been laughing because I'm standing up and my hands are moving around, and it's as if I'm in front of all of y'all, but you can't see me. So again, I hope it's been helpful, and enjoyed it, and I appreciate the comments and the questions that you have asked. Unless there's something else, y'all have a great rest of your Friday and weekend. Thank you.